Hello there, hi, it's Adil bringing you a review of the UK and European markets from an intermarket analysis perspective for Tuesday, the 3rd of February 2015, looking at exactly what happened and what occurred in the markets. Okay, so we start the day with the Chinese market higher, Nikkei lower. From my perspective, Nikkei is very important because the yen pairs obviously decide or dictate risk on, risk off, along with the commodity pairs. Okay, the commodity pairs were hammered overnight because of the Australian the rate cut in Australia, and obviously the RBA talking down the actual currency itself. So therefore, that was classed as a potentially a risk-off scenario, although it was distorted to a large degree. We had the commodities into resistance. We had the yen pairs lower as well. So therefore, overall risk-off scenario. That obviously wasn't the case because the markets, much to my surprise as well, took the actual story of Greece obviously retracting their stance or changing their stance from one of a haircut, okay, to one where a new proposal from the Greek government to restructure the country's debt sent the euro sharply higher against the US dollar. Since the elections, investors have been worried about the new government's resistance to cooperating with the Troika and their demands for partial debt forgiveness. Obviously that they dropped that. Today's creative proposal to exchange its current bonds for new growth-linked bonds and perpetual bonds for the ECB reflects their willingness to come up with a plan that is both palatable to their creditors and to the market. The first part is debatable, and as there's talk that the ECB won't accept a bond swap, but investors are simply happy that progress is being made. I think that line sums it up. So they're happy that progress is being made. So there's talk between the two, and there's certainly a scope for a solution. Okay, so that's basically the situation there. Okay, so although having said that, Miss Merkel did state later on, given the fact that the market was getting too euphoric, that it would take months to come to some sort of conclusion, and don't expect the market, or the market shouldn't expect a solution overnight. Okay, and that obviously poured cold water on the whole idea, and we seem to be back to square one. Okay, so the market short squeezed on this Grexit, obviously fears being alleviated, etc., etc. Even though they are not alleviated at all. Nothing's in concrete, nothing's been confirmed, etc., etc. And that's one of the reasons why the yen pairs obviously were certainly under pressure overnight, because of the uncertainty regarding that. Okay, and also obviously weaker economic data the night before, and that's one of the reasons why the yen pairs were certainly down as well. Now we had weaker earnings on BG Group and BP, and even then the market certainly pushed higher because of the oil price shooting up to $54 a barrel. So we certainly had a short squeeze on our hands. I mean, from my understanding, from my perspective, I misread that. I got stopped out of my short Aussie twice, even thrice at one time, and I also got stopped out of my Euro stock short as well. I got stopped out of my Aussie twice, once Kiwi. So today was more of a stop loss day until the end, where I managed to actually nail 15 points on the short side in the Nasdaq, and then eventually nailed 50 points on the Nasdaq, on the FTSE, on the towards the bullish side. So again, very strange price action from my perspective. Certainly misinterpreted it and misread the market today. Either way, let's try and obviously diagnose and see exactly what happens. So initially the market's short squeeze on a stronger China, interpretation that BP is bullish, and overall oil prices are moving this market higher, given the fact that we went as high as $54 a barrel, and given the fact that FTSE, obviously the bloodline for FTSE is oil. Okay, so that moved higher, and then the yen pair started to shift, and they started to move higher as well, which is quite impressive. Then we had the statement from Miss Merkel pouring cold water over the situation with regards to Greece and a potential deal being struck, and that was negated. Okay, and that created a risk-off scenario. Then we had weak economic data out of the US, very weak to be honest with you. The weak data was the ISM came in half the number that everybody expected at 44.5, and factory orders came in at minus 3.4% when they were supposed to come in at minus 2.2. That certainly isn't a good scenario. So the market obviously sold off. Then all of a sudden, which was quite strange, I think it was Mr. Coccioloretta, or was it Mr. Bullard? Mr. Bullard was actually hawkish. It was Mr. Kochereth that came out and stated that started talking up QE, started stating that the Fed would wait much longer than everybody expected, and they would remain dovish, basically giving the dovish stance on the markets altogether. And then the market short squeezed and moved higher. Okay, that's basically the interpretation. Okay, of exactly what happened and what occurred. Okay, and this is why you're seeing this move higher, and the FTSE futures now around the 6900 level, testing that key, well, not testing, well, on the verge of a breakout. Okay, so on the verge of a breakout, which is quite impressive. Okay, so again, keep an eye out for that. Okay, now the other factor obviously is the fact that the dollar itself absolutely got butchered today, and especially when Mr. Kochereta spoke, and it sold off quite substantially. I mean, you can see this sell-off here, quite a substantial sell-off. Okay, now it's potentially threatening to break out this bullish channel, and if it does, then obviously we all know exactly what happens. Commodities move higher, and the FTSE will move higher along with that, and that could very well be the signal for the FTSE to continue and make new highs. Okay, that's basically how we're interpreting that. Right, so what's going to happen now, given the fact that we've had the weak economic data out of the US, and that's basically spurred the fact that rate hikes will be postponed. QE will certainly be around, or may even come back, according to Mr. Kochereta, stating his. I mean, some of his statements are quite absurd, given the fact that Miss Yellen has a hawkish stance. I mean, I can just read some of them out to you. Fed can make effective monetary policy regardless of its balance sheet size. Strange. Okay. We are alternative, Mr. Paras, we are open to alternative proposals. European government should not fear Greek government, they should fear dead-end policies, etc., etc. That's Mr. Siparis. Here we go. Fed Kocheracota will take a few years to get inflation back to target. Again, that's dovish. Sub-target inflation gives the Fed room to delay hikes. Again, that's dovish. Fed shouldn't hike this year, would retard the economy. Okay, interesting words. Okay, again, that's dovish. Fed shouldn't hike this year. Again, that's dovish from Mr. Kocheracota. And that's basically it. Fed's Bullard was quite. I mean, he basically was. Some of his statements were quite bullish. I mean, listen to this one. Doesn't see a bubble in the US economy right now. So basically stating that keep inflating. Okay, keep buying the dip. Fed's Bullard, impact from strong dollar inflation comparatively small. So basically he's pro-dollar. He expects the dollar to strengthen. Fed's Bullard, FOMC should omit word patient out of March policy statement, but Fed doesn't need to act on rates yet. Again, there's a hint of dovishness and hawkishness in that statement. So again, strange. Again, the strong dollar natural consequence of economic landscape, hawkish. Says dollar not a huge factor for US economy. Again, hawkish. Okay. So there were some strange, very strange statements. But from overall, I mean, given the fact that Mr. Kocheracota basically is coming out with his hawkish, or not so say dovish statements, again that led the markets to understand that Miss Yellen was sending out signals or warning signs to the economy, or to traders and investors, that the market certainly is over-interpreting, or is too hawkish at this very moment in time, and she wants to change that thought process as well. Okay, so that's basically how we interpret that. So the market's obviously short squeezed and moved higher. Okay, and that's basically how the market closed. Okay, so that's a summation of all the events. Higher on Greece, Hopium deal being reached. QE, obviously that's the QE put that's already in place. Market short squeeze, strong China. Then the markets reach a plateau, as you can see here with the French CAC, and then the market sell off on the weaker economic data out of the US. Then all of a sudden people reassess and realize, oh, weak data means interest rates remain low, so we can't be hawkish. And then you send out your little cronies to basically give a even more dovish statement, and obviously create a powerful short squeeze in the markets, and that's exactly what occurred. Okay, so what's going to happen now, technically speaking? Let's have a look. Okay, so let's go to the FTSE 100. A weekly chart, I mean, that's a screaming bullish at this very moment in time. I would be very careful shorting the FTSE 100. From my perspective, I would now, given the fact that today's move was very impressive, I have to admit, I did expect this to potentially hold and resistance to hold, and the daily chart, you can see multiple resistance levels. One of the reasons why I was so bearish today was because I expected this consolidation here, bear flag, and obviously the upper body was the 6811, so I didn't expect that to be breached at all, and the market certainly did. So and again, I expected this resistance level up here to hold, and the market certainly ripped right through it. Okay, and even after hours we went as high as 6900 plus, so that's very, very impressive. Okay, so what happens now? So 6900 is more or less your benchmark. Any move past 6900, provided it's not a fake out, will be very, very bullish. Okay, with regards to the FTSE 100. 60-minute chart, you have this bull flag formation, but from my perspective, I didn't expect this bull flag to play out because of the weak economic data from the US. Okay, and given the fact that the Nikkei was down 220 points as well, and obviously oil prices were into resistance and so on and so forth. So there are a few other variables. One of the main ones being that the commodity pairs were under pressure, yen pairs under pressure. So overall, that was the overriding reason. Obviously, weak economic data as well. Okay, so it's a bull flag for now. We have to respect that. And again, like I said, 6900 and above, the market is bullish. Okay, that's basically what we're seeing here with regards to the FTSE. The volatility index is quite interesting. I mean, this is something that I certainly need to, it doesn't tally up, so to speak, okay, because it looks as if it is attempting to make a double bottom. So given the fact that the volatility index is trying to make a double bottom, and yet, I don't know, something doesn't add up here with regards to the FTSE. So we'll see exactly how the markets react overnight. But one could argue that we're making a potential double bottom and looking for a potential move higher. So that's something that we certainly need to respect, okay? And we'll see exactly how the market fares tomorrow. FTSE 250 is obviously broken through resistance now, but initially I expected that resistance to hold, potentially come back and retest this purple trend line. That wasn't the case, and the market certainly moved higher. Now, obviously, the FTSE 250 is very heavily dependent upon the sterling, and given the fact that the dollar has obviously collapsed in the evening with regards to Mr. Quattro's statements, that's going to be very interesting as to how the FTSE 250 fares tomorrow, and I'll be able to observe that. Having said that, also the oil price has dropped from 54 back down to 51 on stronger inventories, okay, and more supply, less demand, and obviously that's causing the oil price to fall. So that's something that I'll take into consideration as well. Same thing with FTSE 350. Again, watch out for this. If it breaks that 3750 level, then you just have to respect price action for what it is, and the market certainly want to rip higher. Same thing here, bull flag. So it needs to be respected. Daily chart, again, like I said, we're into that resistance. Okay, let's have a look at the German DAX now from a technical analysis perspective. One of the biggest or major concerns for me going into tomorrow with regards to DAX is going to be the rally in the euro. Okay, the rally in the euro is not exactly good news for the European export machine. Okay, which is Germany, as we all know. So given the fact that we've had this impressive thrust higher from as low as 1.11 now back to 1.15, that certainly needs to be taken into consideration. So remember, there's going to be an inverse relationship between the euro and European indices. So expect some form of weakness with regards to the German DAX tomorrow. Again, German DAX dictates the European market. So again, with regards to the FTSE, given the fact that it's dropped from 54 to 51 in terms of oil, given the fact that US markets into resistance, provided the Asian markets are weak overnight, then you are looking at a topping tail on the German DAX, and 11,000 being the high. Okay, you just have to respect that. 60-minute chart, we could, given the fact that the euro obviously has pushed higher, this may well be interpreted as a failed bull flag, and then obviously the markets move lower. Okay, so we're looking at potentially closing the gap now, given the fact that the euro is moving higher, and given the fact that there is a resolution with regards to Greece. Okay, so these are all factors that we are going to take into consideration. Okay, folks. So just be wary of that, and be respectful of that as well. Okay, So that's basically a situation there. Okay, 10-minute chart. German DAX doesn't exactly look very healthy. Even though we are at the 10,980 is your pivot, which is a pivot high, so we have to respect that. But from this very perspective at the moment, I just need to be very, very careful. And again, like I said, that gap lower now is certainly vulnerable from my perspective. Even though you have QE or no QE, it's all about the euro. Okay, so inverse relationship must be respected with regards to the euro. Okay, folks. Right, so that's the German DAX for you. So let's have a look at the French CAC, see if that gives us a signal and telling us exactly where it wants to go. Daily chart, yes, we've had this thrust higher. Excuse me. Okay, so for now, I mean, you still have a horizontal resistance for now. So again, until we break above that, I have to certainly take it with a pinch of salt. 60-minute chart, again, it's a bull flag. I mean, that's not exactly a strong bull flag. It seems to be quite weak or quite or confused, or a bull flag that lacks conviction. Now, basically, I'm keeping my eye on this pattern here, and obviously the gap that needs to be filled and the gap below. So we could get a potential failed bull flag here, and then obviously the market move lower. Now, given the fact that the euro has obviously appreciated quite substantially, the probability of a failed bull flag is very, very high at this juncture. Okay, very, very high at this juncture. Right, so the euro stocks, go through that. Okay, again, euro stocks, even though we had this QE trade and Brexit concerns alleviated, although, like I said, Miss Merkel has poured cold water on it all and stated that nothing has been agreed and it's all been discussed, and basically she mentioned that it would be taking months rather than days. So again, that's not a good sign. I mean, the markets are certainly priced in too much bullishness from my perspective. And again, like I said, the euro stocks has a gap at 3,370, which more or less is vulnerable to being closed. Okay, and that needs to be respected. So again, interesting scenario, very, very interesting scenario with regards to the euro stocks as well on the 60-minute, 10-minute, and the daily chart. And all it's basically what it's trying to say to you is that basically we have a dilemma now. Basically, we are going to see weakness in European markets, given the fact that the euro certainly has appreciated quite substantially. Okay, and sterling too as well. So them to take them into consideration. And as like I said, it's all about that euro. Very, very impressive thrust higher. One could argue now, given with regards to the euro, that we are looking at a potential inverted head and shoulder. So there's your head, there's your right shoulder. Then obviously, given the fact that the Greek situation is out of the equation, we are looking at testing 1.17, if not higher. And obviously that's not good for the eurozone because it's all about exports, and that certainly dampens the ability to export. The one interesting thing with regards to intermarket analysis and looking at the European markets is that you have a gap fill at 2053. We went as high as 2050, so we're not far off at all from that gap fill, and that could be the top in the US markets, and that obviously in turn means a top in the actual European markets as well, because as we all know, they are all intertwined, and whenever you leave a gap behind, the markets always want to close it before it continues in that same direction. Okay, so if you add all those factors in together, it's a certainly risk-off scenario for the next 24 hours from my perspective. So again, remain open-minded, and like I said, the FTSE itself has the benchmark of 6,900, and it needs oil price to certainly move higher along with it. If that's not the case, then again, FTSE weakness. So keep an eye on the Asian markets, see how they do. Keep an eye on risk FX and obviously the yen pairs. Very, very keen eye on them too. And keep an eye on the commodities as well. See exactly what happens with regards to oil and the news flow that accompanies it as well. Especially given the fact that the US data today was very, very weak. And the only reason why it moved higher was based on a short squeeze on hopium for QE or potential delay in the rate hike. And that's all, folks. Like I said, watch out for that 2053 level on the S&P, and that should corroborate with any resistance on your European markets as well. Okay, so risk on, risk off, wax on, wax